Today's episode is sponsored by Future State Media, experts in off-Amazon traffic for Amazon sellers. Future State Media will build you a custom-made website to deliver sales for you on Amazon. Built to grab traffic from search engines and social media, your site can be used as a secret weapon for launching products on Amazon or just to stabilize your Amazon sales. It means you can also build an email list on autopilot. Go to futurestatemedia.com for your free guide to Google SEO for Amazon sellers today. Ladies and gentlemen, this is Michael Veazey of the 10K Collective podcast, a subset of the amazing FBA podcast, which is for 6, 7, and 8 figure sellers. So today we are finally, after months of preparation, going to talk to two very sharp ladies from Simply VAT. Simply VAT helps e-commerce businesses with their international tax obligations across the EU and Canada. And VAT has always been something important to get right, of course, but it is now a way more complex than it used to be, thanks to some EU changes and, of course, Brexit, which is affecting UK-based sellers, but not only those. So we've got Alex and Louise Bousma and Alex Wyatt to discuss this with us. And this is a really important topic, so I would urge anyone listening, this is so important. This isn't some boring topic you can just ignore. This is absolutely central to everything you're going to be doing over the next while. So I'd urge you to sit down, grab a coffee, make some notes. If you're listening to this in the car, don't do that, do it afterwards. So first of all, ladies, very warm welcome. Thank you for coming on the show.
Thank you for having us. We're excited to be here today.
Yeah, and
Thanks,
Louise,
Michael.
good to see you. So you guys are, so Alex, where are you from? Just give us a quick intro of yourselves.
Yeah, so my name's Alex Wyatt. I am originally from Toronto, Canada, but I've moved to the UK about 7 years ago, and I started with Simply VAT about 4 years ago now. And so now I do project management at Simply VAT, looking at all things impacting the company and clients that are facing us, such as Brexit and the 2021 EU VAT reform, and making sure everyone's prepared for that.
Excellent. And Louise, tell us a bit about yourself.
Sure. So my name is Louise Bousma. I'm originally from France, and I've been living in the UK for 5 years now. Before joining Simply VAT, I was already working in the VAT industry, helping companies register for VAT locally in every European member states. And now at VAT, I'm in charge of the research on changes covering Brexit, but also any legislative change that can impact businesses trading in the EU.
Wow, yeah, so we've got real experts here, but what I really like is that you guys have a view from within the UK, but you've also got other perspectives, so the French, so i.e. within the now European Union still, and the North American perspective, and then Canadian, again, slightly outside the usual US perspective. So I think that helps because between us, we've got sort of angles from, we can see this from multiple angles. Now, one of the things to say is that we're going to have several episodes on this topic, and this is something we're going to keep revisiting because everyone needs to be aware of this. Obviously, there are differences for UK-based businesses or UK-based individuals, EU-based and American-based, but I would urge everyone, or I should say North American-based as well, including Canadians, of course. But I would urge everyone to keep listening for at least this episode because we're going to talk about the basics of VAT. I know it's something that freaks out North Americans for whatever reason, even really bright entrepreneurs. Otherwise, they're just not used to it culturally as a thing. It's different from sales tax. And even EU and UK-based businesses would do well to really check they really understand, because in my experience, when you really dig into the details, sometimes people have misapprehensions, and it's not what you know that is going to kill you, as they say. It's what you think you know but is wrong that can really kill you, particularly with tax. So stay tuned. Let's get into the basics of this. So, ladies, first question, what is VAT?
So VAT stands for value added tax, and it is a tax that is added at every step of the supply chain. So wherever value is added. So it starts from your raw materials onto your manufacturers onto the suppliers onto wholesalers, and wholesalers onto, say, the final customers, for example. So it's favored in over around 140 countries around the world because governments get revenue at every step of the supply chain. So it is, and it's also known as GST. So countries like Canada and Australia, you are following similar principles to VAT, but it does slightly differ because within the EU, we're looking at it from within the European Union's guidelines, where we have a free trade agreement amongst us. One thing to note is that it's not supposed to be a burden to VAT registered businesses. So if you are VAT registered already within the EU, you can always reclaim or offset your purchase VAT or any import VAT that you pay on your VAT return. So for you as a VAT registered business, it's not supposed to be a burden to you. You can always get that money back.
Yeah, so I already feel better informed because I guess you've really, I mean, I kind of assumed it was something like that, but actually that really makes a lot of sense. And also the fact that it's not supposed to be a burden to you is interesting because in theory it shouldn't be, in practice it normally is. But one of the questions, where did it even come from? Where did the idea of that come from?
Actually, it was a French idea originally. So yeah, the kind of father of VAT was French, and he's introduced it in the 50s. So yeah, that came from that, and then it just grew. And now we've got what is called the VAT directive, which is an overriding directive which is superior to national legislations. So from this idea, now we've got all EU member states using the directives from the European Commission to implement the different rules across their every country.
So a French idea that we now get to thank them for. So presumably it was a money raising exercise for a cash strapped state. Is that the basic reason for it?
Yeah, absolutely. It's one of the own revenues of the European Commission. So it's just creating, it's, as Alex was saying, it's not a revenue that businesses should bear, but it's on consumers. So it's a consumption tax. And yeah, it represents billions in terms of revenue for the European Commission each year. And it helps funding public services as well. So that's why it's so important. And that's why the European Commission is so keen on collecting this revenue, because it's crucial to fund, you know, all the public services that we need, but also European projects. And that's also why the European Commission has been trying over the last few years to really close what we call the VAT gap, which is this gap in revenue that the EU is expecting to collect, but isn't collecting. And this VAT gap, which again represents billions per year, they're currently really trying to fix it and close it and to get these missed revenues every year.
Yeah, so yet another reason to take this seriously, I guess, is because like all in any times, the government's always wanting more money, but particularly under COVID, everybody's been spending money like absolute crazy. So it doesn't matter when you hear this, I guess, like it could be 2022, 2023, they're still going to be plugging a gap created in 2020, I guess, aren't they? So even more than ever, I think the governments are going to be chasing us down for tax. So tell me a bit about this. I just want to understand the nature of it. I think this may help the North American listener, or particularly US listeners, because you say it's not supposed to be a burden on businesses and it's supposed to be a consumption tax. But forgive me being stupid, but if you're taxing the raw materials, manufacturers, suppliers, wholesalers, they're not really kind of consumption in my understanding of it. Whereas a sales tax, if you go into a US store and you pay $10 for an item and then maybe another dollar in sales tax, that makes sense to me that the burden's falling on the consumer. But how come the burden seems to be falling on everywhere else in VAT? I mean, we're not going to go too far into this, but I just want to understand the nature of the enemy we're dealing with here.
Yeah, so that's a good question. And like I said earlier, it isn't supposed to be a burden to VAT registered businesses. So as a business, if you are, say, purchasing from a manufacturer within the EU, and this manufacturer is charging VAT, if you're being charged VAT, you can always reclaim that on your local VAT return. If it's a purchase cross-border within the EU, say you are based in Germany and you have your German VAT number and you're purchasing from a manufacturer in France, for example, that manufacturer can put your VAT number on the invoice document with their VAT number, and it would come under what's called the reverse charge mechanism. And this mechanism means that there is actually technically zero VAT being charged on the invoice, and therefore you as a business never incur that charge. And it's kind of there to go to be put in your VAT return as an input and output, so that eventually you as the purchaser of the goods now need to put that VAT obligation on the next consumer who's ever picking it up from you. And what happens is the VAT trickles all the way down, essentially, until it bears down on the end consumer. So you never actually fully get charged VAT. And if you do get charged, again, as a VAT registered business, you put your VAT number on the VAT invoice, and you can reclaim that. But essentially, it trickles all the way down the supply chain, all the way until it reaches the final customer, who can't reclaim it any longer, and therefore they bear the final cost.
So, like, if I may say so, Louise, and don't take this the wrong way, it's very French because it's an extremely complicated way of just, taxing somebody at the end of the chain. But my God, it's complicated. I'm beginning to really feel for my US clients now because I feel a bit like them. But let me just clarify this. Can I trying some simple statements in tax is always dangerous, but let me try and just clarify this for everyone listening. So if I understand, basically, if you're VAT registered, although of course you've got to register and pay for compliance and all that stuff, and we'll talk about that separately, but regarding the actual tax, in the end, even though you might pay it in cash flow terms, you're not liable for it. You should get it all back. Whereas anyone who isn't VAT registered is the person who ends up paying it, and in most cases that's the end consumer. Is that an actual summary?
Yeah, exactly. So if you're a business who doesn't have a VAT number, you can't charge that VAT onto the end consumer. So you are being seen as that end consumer. So you are going to be bearing the VAT burden in that case. So yeah, you're absolutely correct.
Great. Okay, well, I think I've got my head around it, and like, it's thank you first of all for being so good about going onto the basics, guys, because I really think that there's a lot of misunderstanding or woolly understanding, and it's certainly true for me. I don't claim to be a tax or accounting expert for sure. So let's move to the next question then. So the practical questions: what triggers or requires a VAT registration? Because obviously, on the one hand, we don't want to be liable for all this tax, but on the other hand, it's an administrative burden, it's a cost, it's hassle, it's distraction. So I guess we we need to know when we have to do this. So how does that work?
Okay, so I have 5 main triggers that will incur a VAT registration here for you. So the first one is holding stock within an EU country. So especially as a non-local business, if you move your goods into a fulfillment center for onward supply to an end customer, you're holding stock in those fulfillment centers, it triggers an automatic obligation to be VAT registered right from the get-go, right from your first sale. And if you want to reclaim your import VAT, you should make sure that you're VAT registering before that import, so you can reclaim the import VAT on your VAT return. So that's number 1, holding your stock within an EU country. Number 2 is selling on an online marketplace within the EU. So now this doesn't technically trigger a VAT obligation. It's not written in the VAT directive anywhere. However, over the last few years, the tax authorities have really started to crack down on marketplaces specifically because there has been a lot of VAT fraud happening through marketplaces, especially from non-local sellers. So what marketplaces have done is tried to shift the responsibility of VAT collection from the marketplace and push it back onto the sellers by making sure that they are VAT registered before they sign up. So not every single marketplace will require this VAT registration obligation, but some do, such as real.de. If you're a non-local, non-EU business, you would need a VAT registration before you sign up to sell on the marketplace.
Right. Okay. So thanks for outlining that about the marketplaces. So specifically for Amazon sellers, because they're obviously the main focus of the podcast, would you need to register uh, for VAT in this situation? And does an Amazon marketplace try and shove the responsibility onto the sellers from the beginning?
Yeah, I've seen it happen definitely in the UK space. They have been requiring, say, again, non-local businesses, because local businesses follow different obligations, but non-local businesses, I've definitely seen Amazon require a VAT registration, and they react quite quickly to changes that are happening in across the EU when the tax authorities try to shift the obligations onto Amazon. They don't want anything to do with it, so they will quickly shift it onto the seller, even if you don't technically have an obligation. It's not in every single country, but in the countries that are starting to crack down, it is important to make sure, when you are signing up to Amazon into their Seller Central, to make sure that if you do have an obligation that you are getting registered, because it can take anywhere between 6 to 12 weeks to get a registration in place. So you don't want to be pausing your selling during a really busy period for you to wait for this registration to come through.
Absolutely. It's interesting to me that because having spoken to experts about US sales tax, which is in a way, well, it was a more developing situation. Now that EU is where all the tax excitement is, if we could say that about tax. But it seemed to me that the trend there is very strongly from marketplaces being passing the responsibility onto the sellers, and the individual states of the United States making the sellers individually responsible, which is turning into a nightmare in places like California. To a lot of places now have hold the marketplaces responsible for the sales tax registration, collection, and remitting it to the states, thus keeping the sellers out of the loop. Now, it seems to me that we've got an opposite trend in Europe. Is that a fair summary?
Not really, because well, I mean, it's really interesting, but because no, actually, there is a similar trend in Europe. Actually, there are upcoming changes in the next couple of years, which will bring further liability on marketplaces as well in the EU. And what's interesting is that, as we were saying earlier, is actually every member state like to kind of do their own thing when it comes to VAT legislation. So although VAT is originally meant to be a harmonized tax across the EU, every member state is implementing different legislations, and that's the same when it comes to marketplaces liability. So we've seen in the last few years that some member states have already introduced liability on marketplaces when it comes to VAT collection. For example, France introduced such legislation last year, Germany as well, for example. So there are different legislations and different requirements when it comes to selling on a marketplace. So I would say that as a seller, if you are looking to start trading on a marketplace, you should definitely keep an eye on the different requirements, because they will be differ from one country to another, but they will also differ in the next few years when these new legislations come into place.
Okay, interesting. So the trend is in one direction. So look, we're still only two way. We've run two of the five triggers, so we better come back to you then, Alex, on that. So the first trigger is holding stock within an EU country. Can I just double check? Is that true for everybody now, or is that true only if you're a company or an individual from outside of that country?
Uh, the latter of what you said. So if you're not a local company to that local country, then you have to VAT register right away. But typically across the EU, as a local company to a specific country, you would have your own local thresholds before you have to VAT register. So it would depend on which country you're coming from and where you're holding your stock.
Being a bit selfish for the moment and say if you're a UK based company, presumably if you don't have to VAT register within if you're holding stock within UK up to the VAT threshold, which is what £85,000 a year in revenue, something like that.
Yeah, it's
Yeah.
85,000.
But then if I want to sell stuff in Germany, I need, or indeed France, Italy, Spain, or the Netherlands, the EU countries that I can get through the Amazon Seller Central account, then I would need to register in each and all of those if I want to hold stock there. Is that right?
Exactly.
Okay,
Yes.
cool.
Yeah.
Good. So that's the first trigger. The second trigger was selling online marketplace within the EU. So what's the third trigger for VAT registration requirement?
Okay, so the third trigger is crossing over an EU distance selling threshold within a calendar year. And so we haven't touched on distance selling thresholds, but as a bit of a tax nerd, they are my favorite set of tax rules. And they're my favorite set of tax rules because they help sellers, start selling cross-border within the EU without a huge cost to compliance, but it allows you as a seller to test the different markets, to see where your end customers are before you put in a load of money into exporting into those different countries and fulfilling from those different countries. So if I walk you through what the distance selling thresholds are, they are where you are holding stock in one EU country, for example, and you are selling cross-border directly to private individuals in another EU country. So this is where you can sell up to a certain threshold, typically 35,000 euros. Or if you're selling into Germany, Netherlands, and Luxembourg, it's 100,000 euros. And you can do this per calendar year. So you can continue to sell up to these thresholds up until December 31st of each year. If you don't cross the threshold goes back down to zero on December 31st, and you have a whole year to restart and try and cross over the threshold again. You will be charging the local rate of VAT until that threshold is met. So wherever the goods are being supplied from. So the sale departure country, we like to say. Excuse me.
No problem. So you're paying the VAT at the level of the sales departure country. Yes. By the way, I'm very entertained with the fact that it's your favorite tax. I mean, I think a lot of people out there be like spitting into their coffee right now going, dude, what? Favorite tax? But I see what you're saying. So the distance selling threshold, and just to feedback and make sure I've understood, to give other people a chance to who are listening to absorb this stuff. It helps sellers because it lets you test markets. I get that. So we hold stock in one EU country, cross sell to another, and it goes back to zero, and you pay VAT at the level of the sales departure country. Is that all correct stuff?
Yes, correct.
Okay, good. So that, however, it triggers VAT registration. So tell us about that.
Yes. So if you cross over this threshold within a calendar year, that is where it triggers a VAT registration in the inbound country. So if you're selling cross-border, you're holding goods in Germany and you are selling into France, once you cross over the 35,000 euros threshold in France, you now need to VAT register in France. And then you're no longer going to be accounting for the VAT in the sale departure country, such as Germany in this example, and you will now be shifting the VAT rates and in the end obligation to France. So now you're going to be charging the local rate of VAT in France, filing local VAT returns in France on a monthly basis, and ultimately paying the French tax authorities what the VAT rate that is due there. So you're no longer paying it from the sale departure country, but it's shifted to the sale arrival country.
Right, I kind of get that. It sounds like a bit of a nightmare, but okay. In theory, that makes sense. Right, so that's the third trigger for VAT. What's the fourth trigger?
So the fourth trigger is drop shipping from a supplier within the EU. So there are some sellers that are drop shipping directly from a manufacturer to the end customer. So they never ever see the products. They get shipped right from the manufacturer as soon as a good is bought online. Now, a lot of people would say, I don't see a product. I never, I don't have that obligation. But you do. And the reason for this is because you become the owner of the goods before it is sent to the final customer. So what happens is you have your manufacturer, say, sitting in Austria, and in Austria, what happens is somebody purchases a product. You then have an obligation to purchase the product between yourself and the manufacturer in Austria. So now you own the goods when it's in Austria before it has even left the country. And then the goods get shipped cross-border or to wherever your end customer are. And that then means that you have a VAT obligation because you have a taxable supply in Austria. So that means you now need to VAT register in Austria to then be charging the Austrian rate of VAT because you are deemed to be holding stock within an EU country in Austria. Does that one make sense?
I think so, yeah. I mean, okay, I guess that, this brings me, by the way, this is normally the stuff I'd say right at the end of the conversation, but right now I just want to say, obviously, your individual situation, if you're listening, is going to vary, and you can go to Simply VAT. If you go to amazingfba.com/simply VAT, V for value, A for added, and T for tax, then you can get a free consultation from these guys. And I'm beginning to think that for everybody, that's a really, really wise idea, if only to check that you're free and clear and don't have to VAT register somewhere, because this is even more complex than I anticipated. And I was anticipating it being complex, but I think I get that. Okay, so drop shipping from a supplier within the EU, you're not exempt. And just to clarify what we're talking about what triggers VAT registration, i.e. needing to register for VAT and submit returns. We're not talking about the triggering necessarily having to pay VAT. Is that right? Or can I clarify that one?
I think once you're VAT registered, you then need to start charging VAT on your products and then, remitting that to the tax authorities. So I think it's kind of all encompassed under one. Once you're VAT registered, you then need to, start collecting it right from on all your sales.
Okay. So the fifth and final trigger for VAT registration, what is that?
So the final one, it's importing goods into the EU for onward sale to a final customer. So this is, say, if you are importing goods directly to a final customer from outside the EU. Say if you're holding all of your stock in America and somebody purchases your goods, say in Italy. And what happens is if you want, what happens is you get charged import VAT and duties when importing goods into the EU. And you now need to decide who is going to pay those import VAT and duties. Is it going to be you or is it going to be the customer? And the person who pays it is called the importer of record. So the importer of record will ultimately be paying these goods as they go through customs, any VAT and duties. Duties are non-reclaimable, but the import VAT is. Now, if you as the seller want to be the importer of record and you want to reclaim the import VAT, then you need to be VAT registered in each country that you're importing into. So you can't reclaim VAT without having a VAT registration in that specific country. So this means that you as a seller would need to have VAT registrations in multiple different places if you're selling to multiple different countries. If you want to make the customer the importer of record, that's absolutely fine. But it's really, really important to make sure that the customer is super clear at the point of checkout that they will be having to account for these additional duties and VAT before the goods actually come to them through customs. They don't want any surprises or extra fees coming at them that they aren't prepared to pay for. So you as a seller, if you aren't the importer of record, then you could be seeing lots of returns or a bad customer experience because they might not be prepared to pay these extra fees, later down the line in the customer journey. So that's just something to be aware about with that.
Yeah. So let's just deal with that in a sort of practical way, because I think as a customer, I've very occasionally experienced having to pay some import duties and VAT, what have you, when I bought something in America. But I don't know if that was ever from on Amazon. So how does it work in the Amazon context? Does Amazon even allow you to do that, or does Amazon just kind of add that onto the cost, or how does that work?
So I think through what Amazon do at the moment, they have a global shipping program, and This is actually where I'm pretty sure the customer is the importer of record under the global shipping program. So you as a seller would not have to have multiple registrations in that case. Again, you could to take on that responsibility, but you don't have to. It's mainly if you're looking at actually listing your products in, on the .co.uk website or .de websites, etc., marketplaces, where Amazon don't want the customers to be the importer of record, because again, it kind of it gives it a bad customer experience, and Amazon is all about the customer experience. So it kind of would depend on which kind of way you're listing your products on Amazon.
Okay, but for practical purposes, and it's a pretty strange thing to list products and install them in the USA if you're expecting to sell them to Italians, apart from the odd exception. So presumably, if we're talking about an American-based business, say USA-based, that is wanting to sell to Italians, you would probably import the stock to somewhere in the EU, and then you would at that point have to register for VAT in whatever country you're in. Presumably Italy, right, would be the common sense version.
Yeah, that would be the best option for
Yeah.
a business. If you are looking to start targeting businesses or customers, sorry, in the within the EU, your best option would be to move stock over here. It would be better in terms of shipping. You have access to prime customers. And you can even look really at localizing, any of your products and your operations, really. So I think it would be a good idea for businesses looking to sell directly to EU customers is to start looking at a supply chain coming into the EU
Yeah,
directly.
absolutely. And can I just say that occasionally I've come across clients, mostly who are new to the space, but to the whole game of importing, exporting, selling online, etc., that do come up with some crazy ideas like, I'm going to import from China to the USA, and then I'm going to send goods on to the UK to make sales. At that point, I'm like, why would you do that? It's incredibly complex and incredibly time consuming and expensive. So just for the 1% of listeners who would even consider that, please don't. Please just go directly from China to whichever country you're selling to if you're exporting from China, or for that matter, Vietnam, whatever, right? I mean, it's just a bit of common sense. I say this because an otherwise highly intelligent person who's a former business consultant was about to do this when I worked with her once, and I said, no, please don't do this. So talking of importing and exporting, what are if there is such a word as simple when it comes to VAT, what is the simplest version of what we need to do to import into a country? And obviously, there are going to be differences from where you're starting off. Let's assume that I'm a UK business. No, that's going to get complicated because of Brexit. Let's assume that I'm a German-based business. I want to import some stuff from China into Germany. What do I need to do?
So if you're looking to start importing into the EU into a fulfillment center directly, you're getting a pallet or a container coming directly into a warehouse, you will need to look and to get VAT registered. Again, if you're a local company, you have your local thresholds. But one thing to note, if you are a local company not exceeding that threshold yet, you can't reclaim your import VAT on your VAT return. So it might not be beneficial for some businesses and it might be beneficial for others. So that's just one thing to keep in mind. But as soon as you look to import your goods into a fulfillment center, like I spoke about a little bit earlier, you will actually be the importer of record because you're going to be importing your goods into the EU and it's still going to be your stock. You're not sending it to a customer right away. What happens is you will be paying import VAT and duties. So your import VAT is typically a standard rate, and this will depend on the country that you are importing into. So if you're importing into Germany, for example, you will be charged 19% standard rate, and that will be on the cost value of your products plus any freight, duties, and insurance. So that's something to keep in mind. Now, again, this import VAT is going to be reclaimable as long as you are VAT registered in that country, and you are going to put the EORI number on your import documents. The
Can I
EORI,
I was just
yeah.
going to ask you what an EORI number is, but you're about to tell us. My bad.
No, no problem. So the EORI number stands for Economic Operator Registration and Identification Number. So we've shortened it down to EORI so we can actually say it. And what it does is it identifies you across the EU at customs for customs purposes. And what you're going to do is you need one EORI number across the whole of the EU, and you put this EORI number in box 8 on your import documents. Box 8 is typically the consignee information, and this will allow your goods to go through customs. They will be assigned to your business, and you will be able to reclaim that on your VAT return, so long as you are VAT registered and you keep the documents for proof of import. So you'll have a SAD document or a C88 document that will prove these imports were yours and that you paid the import VAT.
You're starting to speak fluent bureaucratese now, so yeah, okay. But anyway, you keep the document. So, by the way, question then, perhaps a more fundamental question. You talked about the consignee. So, what is the difference between a consignee and an importer of record? Because I've always been a little bit worried about that difference. I thought I understood it, but please clarify that for us.
They should be the same thing.
It should be the same thing. So tell me, so an importer of record. So for example, I've got mikescompany.co.uk and I'm based in the UK. I want to import stuff from China into the UK, which is not a member of the EU anymore, but it's still under the whatever you call it, the transition arrangement. So I guess that for now I can act as an EU company, right? So I have to get an EORI number, and I'm the importer of record because it's my company that's importing the stuff, right? Am I also the consignee? Is that the same thing?
Yeah, the same thing. So that's the person who's going to be paying the import taxes, the
Okay.
consignee. Yeah. Um, now, now that we talked about import VAT, you also have your duties as well. Duties are actually going to be non-reclaimable. So this is something that you're going to have to be factoring into your margins or any overheads that you have. And the duties, there's no standard rate to them. It would depend on the products you sell and their commodity codes. So this is something to check with your freight forwarder when you're looking to start importing to see what the duty rate is, so you can make sure that you account for this on any of your, planning, your forecasting, any financials that you're putting together.
Excellent. All right. And then exporting, another fun game. So let's assume that you've imported something from China to, say, UK, and I want to send it to Germany. That's going to get the Brexit thing, isn't it? So what do we need to know about exporting? Let me ask a simpler question. If we are exporting stuff in any way.
So the first thing you need to think about is if you're exporting goods. When we talk about exporting, we talk about it in the view of, say, the EU, for example, because if you're exporting from a country to another country in the EU, you're covered by the distance selling rules. So that's one thing to remember. So we're looking at exporting outside of the EU as a whole. Now, when you export outside of the EU, everything is going to be zero rated for VAT purposes. So you won't be charging VAT on the sale departure country any longer because you are going to be zero rating the invoice completely. One thing to note is that you are going to need to keep proof of export. And this proof of export will be used later down the line, say if you get audited from the tax authorities, that you need these documents to prove that these goods have actually left the country and that you do not need to account for the VAT on them any longer. So that's really, really important. Keep all of your export documents, your invoices, anything that you can, keep these for, I can't remember the period of time. Louise, you might need to help me, but if you keep them for a set amount of time, so the tax authorities, if they do audit you, you have that backup and you have that proof of export that you can go back on.
I don't know what the EU specific rules are, but for UK, for most types of stuff where you could be sued or investigated by tax authorities, so civil matters, standard is 7 years for tax records. So I
Yeah,
imagine that's a good rule of thumb. Is that the same in the
yeah,
EU? Yeah.
yeah. I think it's 5 or 6 years.
Yeah.
Um,
I guess if in doubt, hang on to it for 7 years and then you save.
Yeah.
Yeah. Okay. So basically, what you're saying is, for example, I'm trying to think of the practical situations where this would arise. For example, if you get something made in the UK, or no, let's say you get something made in Germany that they make really well, they're like really high end hard goods, or possibly more likely, I don't know, supplements or something like that, that you might export that to America or something. That would be a situation where this thing would apply, right? And you basically don't have to pay any VAT, but you will need to keep some proof just in case you get audited. Cool. You're all nodding there. Look at me getting tax things right for once. So now, having nailed all this stuff down, um, a great sweat and intellectual thought, and thank you, particularly Alex, for some really, really clear explanations of complex stuff. I really appreciate that, and I hope the listeners do as well. The heartbreaking question is this going to stay exactly the same over the next 12 to 18 months, or is it going to change a bit or a lot?
So there will be changes because, as we know, so as we're recording this episode, we've got just about 4 months to go until the end of the transition period. So the UK has officially, obviously, left the EU, but at the moment, until the end of the transition period, EU VAT rules still apply the same. The UK is still part of the Single Market and Customs Union. However, from the 1st of January, there will be significant changes to the way sellers based in the UK trading into the EU will have to changes they will have to consider, whether it's looking at their supply chain, additional costs, additional delays, moving stock, etc. There will be significant changes applicable. And it's the same with EU-based sellers trading into the UK, for example. They will also have to look at what changes, what are the VAT implications to their business when it comes to their supply chain, etc. So this will all change after the end of the transition period, unfortunately, and the UK will be considered as a as a third country. So ultimately, UK-based sellers will be considered to be outside of the EU. And will be treated as we're currently treating US sellers, for example, as non-EU businesses.
Okay, so I guess the moral of the story, which brings you back to the same thing again, which is I'm always begging people to go and talk to financial experts anyway, but particularly when it comes to tax, just please, please talk to your accountant. But when it comes to VAT in such a moving environment, it's so obvious that you really should be consulting with an expert. I hope you've heard just how good these guys are at explaining stuff. I'm certainly very impressed. So if people want to get a consultation with you guys, I know it's amazingfba.com/simply VAT. So we've got a link that it's simple for people to find. Just give us a quick flavor of the sorts of things that you can help people with, sort of questions that come up.
Yeah, so we can help e-commerce businesses with their VAT registrations, ongoing VAT compliance, consultancy, anything that you need in regards to VAT within Europe, as well as Canadian GST, PST, QST registrations, and then the ongoing compliance in Canada as well, and EORI number registrations as well, because that's going to be ever prevalent, going through the end of the transition period. So yeah, if you need any assistance, we're able to help. But I actually just wanted to throw one more tip in there because I know that there might be a lot of North American sellers listening in. And one tip I wanted to throw out is because US sales tax or even say Canadian GST is slightly different in this respect, that you need to make sure that you are incorporating VAT into the prices that you're listing on the marketplace or on your website. It is not added at checkout like it is in America or Canada. So you as a seller are responsible to add in the VAT into the price listed as you listed on Amazon, for example. So this is super important to know because the VAT rates do vary between across the EU at 17% to 27%. So if you're not accounting for this VAT in the price that you list on the site, you could be losing out on that completely in your margins and your profit margins. So make sure that you're accounting for that when you're listing your products right from the beginning. It's super, super, super important. It's not added at checkout.
Thank you. Really important point. And I guess it takes a North American or somebody who's diving into stuff all the time to make that point. Because to me, having grown up within the European Union, I've never been outside the European Union. I have to confess, really. Well, rarely, like America once, but it's it's strange the opposite way around. So I would say to any British or European sellers, when you're selling in the USA and Canada, don't forget they're going to add sales tax to what you're putting there, because it's a very different way of thinking of it. Because if you do something habitually every single day you go into a shop for your life, it becomes so ingrained, it's hard to think of a different way. So that's really important. Thank you for that. And the other thing to say is just to flag up, obviously you guys can advise businesses based in the UK, European Union, or North America, right? So Canadian, US, anything else. Do you deal with really exotic kind of places, like if somebody's registered in New Zealand or Australia, can you help them with these things as well?
Yeah, so we can help businesses all around the world. Doesn't matter where you're from. And on the occasion, we do help businesses with Australia, New Zealand, sometimes Japan as well. They all follow similar GST principles. But it just kind of like our core focus is definitely EU and Canada, as those are kind of the big markets at the moment. But as Amazon starts to shift into the other EU countries, or people start to look at entering, with their own market or with their own websites, then absolutely we can help or assist or give guidance.
Great. Well, guys, it's been a bit mind-blowing, but really clarifying and helpful. So thank you very much. Next time we talk, next episode is going to be talk about VAT differences across Europe. All the fun to come, but thanks very much indeed for now. Thank you very, very much for sharing your expertise so well.
Thank you.
Thank you, Michael.